Okay, welcome to Friday. Me and Steve Ochs from Evolve Bank and Trust. Going to be going live soon. We're live, but live on radio.
Right.
There's a lot of lives going on.
We've got a minute, we'll do a quick
Okay,
sound check,
thank
and then
you.
we'll go on your headphones.
Oh, easy. Okay, so the quick, so you want to have this, you may want to do it like right in front of you, Steve.
Okay.
And like have it like a fist away. And you may want to push it this way because like if you turn to look at me, you're not going to be able to talk. So here, just
Yeah,
move.
completely turn your body.
Yeah, actually turn.
Okay.
Bring your body the
Yeah,
other
no,
way. Like go on the other side of the
Because
mic.
I can already
Oh,
tell you're
okay.
gonna be
To the
facing
left
directly.
side, right? To the right side of the
Yep,
mic,
something
right?
like that.
Oh, okay.
And then have the thing in front of you. There you go. And just
Perfect,
about.
Steve,
Yeah.
perfect.
Yeah.
Okay.
Awesome.
All right, and can you guys hear each other?
Sure.
Yep, I can hear you.
Great, we're going live in just about 10.
Okay. You ready?
Ready.
Okay. Ready or not? Here we go. Oh, we lost you out of that thing. Actually, you know what? We lost you on the screen now.
All right.
Yeah.
Oh.
If you want, just like that, just move. There you go. Perfect.
Figure it out.
Showbiz, right? Hello, and thank you for tuning in. You are listening to the Financial Chick Show, and I am the Financial Chick. My name is Denise Nostrom, the CEO and owner of Diversified Financial Solutions, a full-service independent financial planning firm located in Medford. I am here live every Friday from 5:30 p.m. to 6 p.m. on 103.9 LA News Radio. Your Financial Chick is here to help you make better financial decisions and choices to improve your life and reduce your anxiety and stress about money. If you have any questions on anything we discuss on the show, you can check out my website at financialchickshow.com. If you missed any shows, you can listen to them under the media tab on the website. We are also on Facebook at Diversified Financial Solutions, so like our page to get updates and see what is happening. So we've made it to Friday. It's been a crazy busy week again. I don't know, it seems like I feel like I say that every week, but I'm really happy to have a guest with me here in the studio today. He is the Senior Home Loan Consultant for Evolve Bank and Trust Company. So I'd like to welcome Steve Ochs to my show today. Hey, Steve.
Hey, Denise.
How are you doing today?
Excellent.
Yes.
Thank you for having me.
You're very welcome. So I know we were talking a little bit, and you were saying that you've been a little bit crazy. The weeks are just flying by and very busy and running and all of that.
All
Did I
of
get
the
it out
above.
here?
Yes, yes. Interest rates are still at all-time lows,
Mhm.
probably close to a 50-year low, and purchase business, all my real estate friends are telling me that the homes have lines out the door.
Mm-hmm.
So it keeps us jumping, which is a good thing.
No, it is a good thing. Well, we're definitely in an interesting time. So why don't we start by telling my listeners a little bit about yourself and what you do at Evolve Bank and Trust.
Oh, absolutely. So as a senior loan consultant, I meet with people, collect their data, help them get pre-qualified, pre-approved for a purchase, and match them up with loan programs that help solve their purchasing needs. Some people need low down payment, some people need to get closing costs, and they may qualify for a grant such as the Sony May program that can afford people money to renovate a house or pay closing costs.
Okay, very good, awesome. So and that's why you're one of my strategic partners. We've done a lot of business together with my clients that come to me with these types of concerns, or if something that I identify and see that they're still sitting at a mortgage that's at 5 or 6% when rates are much lower than that. So my job is to help them save money, and then you're the man to save them that money, which is awesome. So that's a good thing. And then of course when they save that money, they can do investments. So it all works out. So I guess one of the things that a lot of people have is a question, what's the difference between working with a consultant like yourself, other than just saying going down to the local bank or to the credit union and just working with somebody there? So what's the difference? And what makes you...
Okay, that's a great question. It's 25 years of experience in doing this, a large breadth of knowledge, and it's not just myself, my support staff helps me out so that there's so many programs out there, and because of the sit down and getting all the information up front, we can find solutions for people's situation that other banks can't. We have good experience with accounting, so we can work with self-employed borrowers, typically better than other places because of our understanding of the tax returns and the income that's sometimes buried there by the accountants.
Right, or needed to get to the closing, right?
Exactly.
But that's good. I mean, and that's very similar to, and that's why I like the way we work together, is that it's just finding those solutions and not just the one size fits all. A lot of times we go to the bank, it's like, oh, I need a mortgage. Okay, we'll get you a mortgage. But really digging in deep, and sometimes, we have those cases where, maybe somebody is marginal, or there's a situation, like you said, with income. How can we get them, they have enough to support that mortgage, but sometimes the bank's like an automatic no. Mm-hmm. And you really want to get to the yes. So, and again, not saying that you're not doing things that people that just back in the day where if you could like breathe on a mirror and you get a mortgage. We're not talking about that, of course.
Yeah, I don't look good in that kind of striped suit.
Yeah, no. But finding those various things, like you helped me with one client that he did have, he was up at a very high mortgage and he had PMI, and he had it for like the longest period of time, and not realizing that his house went up, and so you helped this gentleman a great deal. So I appreciate you for that one. And so those are the types of things that Steve and I do and work together. So you kind of alluded to this before, that interest rates, interest rates were going up actually, from like 2015, and then the Fed funds target rate, which is based on the mortgage rates, was up at 2.5. Then the pandemic hit, and then we dipped down to 0.25, and like literally that happened overnight. And of course that opened up a whole array of opportunities for people. So, lower rates are obviously a good time to refinance. So I guess give me some rules of thumb. What should one consider when doing a refinance on their property? What makes it a good time or a good idea?
Starting out with what is the current rate, and are we going to be able to lower it at least 1% or more, and especially looking at the loan size. Obviously with say $100,000 loan amount, that savings won't be as great if it's a 1% drop as if it's a $600,000 loan amount where you're going to, pick up quite a bit of savings even with a 1% drop. Closing costs are significant, so there again we have to figure out if it's to the client's benefit to do the refinance. Other things to look at is what about other liabilities that they have? If they have an expensive car payment, if they have credit card debt that's not paid in full, maybe the refinance will allow us to consolidate payments and save them significantly, and maybe the blended rate is really not the 5% mortgage rate that they have, but a 7% car payment, 9% on credit cards, so the savings is really magnified when you consolidate those payments.
Absolutely.
So it's never a simple thing, and sometimes we end up telling people that we've sat down with, you've got a great loan at 3.5%, and it's really not worth changing it right now because you paid down a number of years.
Mm-hmm. Yeah. And that's interesting too, and some people come in with all of that debt as well, and that's another whole wrinkle that you have to address because sometimes they can't even go for that refinance. So is there ways to help? I think you kind of talked to them about suggesting things to pay off or move things around or...
And that's true, especially purchasers. I've rarely found where somebody at the age of 18 says, in 9.5 years, I'm going to meet that significant other and buy a house. Mm-hmm. So they come into things because they have met somebody, they want to have a yard for the kids to grow up in, and you see, well, they rewarded themselves with a $600 car payment. Well, when they're marginally qualifying to begin with, that could have a huge effect on whether or not they can move forward. So we try to suggest to them, monitor your credit, pay your credit cards down where you're paying them off in full, which is always a good idea. Mm-hmm. But so many people, when they just start out, they'll pay minimum payments, they'll go on vacations, and they may find out that they have a hard time qualifying. So over a period of time, 6-8 months, we can get them where they can cross the finish line.
Well, that's and that's the thing that I work with my clients is to help them, because that's when I ask them what their goals are and if buying a home is something on their pecking list, and then I look at the rest of the stuff and try to tell them, okay, these are the resources where you need to start working, and so I make your job a little bit easier anyway, right?
we could all use help, that's for sure.
That's definitely true.
We have special programs I mentioned before. Sony Mae, State of New York Mortgage Agency.
Well, if you want to just hold that, we'll hold that for the break. We're actually running into commercial right now,
okay.
But this is the Financial Chick, and you listen to the Financial Chick Show, and we're talking about refinancing and mortgage today with Steve Ochs from Evolve Bank and Trust. And again, as part of your whole financial situation, it's about saving money and doing the best that you can, and the dream of home ownership. So stick around after the break. You're listening to the Financial Chick Show. It goes very quick, and then we have the second half and whatever. But it's good. But it is true. Like people are like, oh, I want to buy a house, and then they're like, oh, I have this saved, and then they start whipping out the credit cards and then the student loans and all of these different things, and I'm like, all right, we got a little work to do.
Oh, my favorite is I have good credit, and then we run it. It is like, whoa, a 580? You worked hard to get that.
Oh my gosh, yeah. It's crazy. So yeah, but I definitely will talk about the programs that they have, because that's important. So a lot of people ask me that too.
Mm-hmm.
About all these different programs, first-time buyer. There's so much confusion about that. So we'll talk about that. Oh, but we'll start with the cost of refinancing.
Sure.
Basically what that is, and that wonderful transfer tax that New York State just gave us as a present.
Gotta love it.
1 minute.
Thank you.
Okay. I didn't know they had this studio here. This is neat.
What's that?
I didn't know they had this studio
I
here.
know, isn't it cool? It's kind of quiet right now. Like
Yeah.
usually you see people, they're walking and it's piped through, so it's
Mhm.
through the airport. This glare, I can see you, kind of sun glare.
10 seconds.
Welcome back. This is Denise Nostrom, the Financial Chick. My company is in Medford, and you can reach me at 631-758-8691 or visit my website at financialchickshow.com. We are here to help you on your financial journey. Over the years, things change, and we are here to help you navigate all of those changes. So thanks for coming back after the commercial break. We are here with Stephen Ochs of Evolve Bank and Trust Company, and we are talking about refinancing and mortgages and how that is part of your entire financial situation. So before the break, we were discussing refinancing, and of course the thing that everybody has on their mind is, it's always about costs and fees and charges. So what would you say would be the cost for doing a refinance for the average person?
It's a significant number. State mortgage tax is a big hit, almost 0.8% in the cost there.
Well, that's something that's fairly new. We didn't have it. When did that come into play? Maybe
It's been around for a while. It's just
5 years ago? Yeah.
it keeps going up.
That's true. Just like everything, I
Yes,
guess, right?
unfortunately. There's bank attorney fees. There may be title expenses in there, recording fees, processing fees, underwriting fees. So it becomes a significant number, and it's something that has to be looked at to make sure that it makes sense for people to do something. So one of the
Absolutely.
questions is, how long do you expect to be in the home?
Exactly. Yeah,
Somebody
that's the big-
moving in 2 years may find that although there's a great savings on a monthly payment, they're not around long enough to recoup it.
Mhm. It's true, and I've had people say that, like, I'm at such a high rate, I'm going to refinance, but I'm probably going to sell the house in a year. I'm like, then don't do that. You'll never recoup the cost, and it's a hard concept for people to grasp, unless you really kind of lay it out. And we try to do that, lay it out on paper, to show them, this might be good or it may not be good.
That's the benefit of planning.
Absolutely, for sure. So, well, I guess if someone out there is looking to do a refinance, how should they go about doing it? Like, what should they gather? Obviously they'll give you a call if you want to give out your number. You could do that. But what, if they were come to see you, what should they be prepared to present to you?
Okay, so get a hold of your current, most recent mortgage statement, your real estate tax bill, your homeowner's insurance, so we know what the monthly carrying costs are for the house. It'll also tell us whether or not they're paying PMI. So recently, with home values going up, that person might be able to avoid the PMI due to the fact that their house appraises for a higher number.
Okay. For those listeners out there that are not sure about what PMI is, can you explain that a little bit?
Okay.
Primary mortgage insurance?
Primary mortgage insurance is an incentive for a lender to create a loan when people have less than 20% equity. So if you're thinking about, say, a $500,000 home, and that would require $100,000 for down payment, maybe another $20,000 for closing costs, that's quite a hefty budget. It doesn't mean you can't buy a house. If you have $60,000, you could put 40 down and still have your 20 for closing costs, but you would have to pay that PMI. And the PMI is a risk-oriented thing where somebody with a lower down payment pays a higher cost than somebody that could come in with a higher down payment, 10% or 15%. And at 20%, there is no PMI.
Right. It's annoying, but but it's a way at least you're going to get into the house at that point, and I think PMI is tax deductible, I believe, right? So it's not all bad news.
That's
I
correct.
suppose. Yeah.
Up to a certain amount of income, it's deductible.
So I had an interesting question come through. If someone has been up to date with their current mortgage, but their credit is bad, would they be able to refinance?
Well, that's always a qualifying thing. In other words, banks typically want on-time payments on the mortgage within the last 12 months, and credit cards and installment loans being paid on time. Now, that being said, there's always situations that come up. Recently, we had COVID-19. So if somebody has a reasonable explanation for that, that's part of my job to see if it's something that we can work with.
I guess that's another perk for working with a consultant, in that you can have those discussions. It's not just, there is sometimes just not everything that's numbers and dollar signs on paper. There's extenuating circumstances that could possibly give it a better look, so to speak.
I'm fond to say mortgage guidelines tend to be black and white and people's lives are gray areas. So,
Amen. That's really true. So true.
everybody has a different story, and, part of sitting down with them is finding out what happened. Was it, a late payment due to an illness? That's a lot different than somebody that just didn't feel like paying a payment.
That's right. Yeah. That's a big thing. But a lot of times we just presume a lot of stuff, and that's not a good thing.
True.
So we talked a lot about refinancing, but what about those that are looking to purchase a new home? What are some things people should know? I think we've kind of alluded to some of the stuff, but obtaining a new home, maybe some of the programs that are out there. Someone feels that they can't buy a home, or maybe they're a first-time home buyer. What's available to those people?
Okay. One of my favorite programs, I mentioned before, Sony Mae State of New York Mortgage Agency, has grants up to 3% of the purchase price for closing costs up to a maximum of $15,000. So that can cover a large part of the closing costs. They also have grants for a vacant home that you could do a renovation, so you could replace a roof on a house that maybe was neglected over the last several years.
Okay, well, that's pretty good. Now, how are you approved for those? Like, what type of qualifications?
There are income qualifications for these programs. In the past, they were extremely low, so it was real difficult to purchase a home on Long Island. But nowadays, in the 100,000 range, people can afford to buy, purchase without a lot of debt, in the 400 to 500 range. So, it makes the homes that much more affordable if they can get some assistance from the state in terms of closing costs, or perhaps updating a home that is crackerjack stock from the 60s.
Right. Okay. Well, that's good. That's good to know. And then first-time home buyers, like what type of programs are out there?
Mortgage programs can come in with as little as 3% down if they income qualify. So in an area like this where a starter home could be as much as $400,000, that could really be beneficial. Savings patterns, going through school, maybe having student loans, having a car payment, maybe having to pay rent, all work against that person, being able to stash money aside for a house purchase. So programs that are low down payment, like a VA where they can qualify with as little as zero down, could be huge in terms of them moving forward. There's also things that we could do. They're not so prevalent now because home prices are at the absolute highest, but in a more normal market, there's things like a seller concession where they can creatively finance legally in the home 3% of the loan amount, which again, might get them across the finish line that much sooner rather than waiting several months to try and save that additional money.
Gotcha. All right. So that's what's so important. I mean, I think these are the things that people need to know because, we just do the traditional, I've got to save up the 20%. And again, that's always a good way to go. But, owning a home is the American dream, right? So this is something we all want to do. So thank you so much for being here today. I mean, hopefully we can come back again and, we'll see. It's a hot refinancing. We'll see how it goes. But people are always buying houses, right? So there's always something going on. So next week I'm going to have a exciting guest that is Paul Meeks. He's a frequent contributor to CNBC, the lead portfolio manager of a wireless mutual fund, and he's also a CFA and a professor at the Citadel. So tune in next Friday, and this is the Financial Chick, and I hope you all have a wonderful weekend, and I hope the weather's better this weekend too. So look forward to speaking with you next Friday. Have a great weekend. Oh, I'm exhausted. I really am.
It went quick.
It goes really quick. That's the common theme. Everybody always says it goes so quick.
It does go quick.
It does
Yeah,
go very
it
fast.
does. I just thought of that question when I was listening.
But oh yeah, no, thank you. That was
Yeah,
good.
okay.
Yeah.
Because people say that. Because I know people through this whole pandemic thing that and sometimes people with medical bills, their credit gets ruined. College, so a lot of parents. I know a friend of mine who did the Parent Plus loans, and they paid their mortgage on time, the car payments on time, credit card, they rarely use it. But College Plus loans, the pandemic came in, the business is bad, the credit got ruined, and they want to take advantage of the low rates, and they want to be able to make I can refinance, save myself $500, but they've been through that,
Yes.
and they're like, well, I'm trying to save money, but he goes, well, maybe if you were late in some mortgage payments, it would have helped. Is that true?
No, not really.
No?
I mean,
Okay.
in terms of
Is it?
an underwriter, the worst thing to be late on is a mortgage.
Right. But the guy's never late on his mortgage. He just wants to loosen the belt a little bit,
Mhm.
But he can't refinance.
Well,
Call
give me a
Steve.
call.
Yeah, maybe I won't yell at you. Give me a card. Because it's like, hey, because I know my credit's not good, but I've never missed a mortgage payment. I've been late with a mortgage payment. He just wants to make it a little bit easy for himself while he's rebuilding his business.
Mhm.
Would you mind just taking a quick picture with us?
No, of course.
Thank you.
Yeah, no more masks in the pictures.
Yes.
I know, right?
Isn't that nuts?
Awesome.
Isn't that nuts? Crazy.
It feels like a vacation almost.
All right.
People
Thank
say to me, "Oh, it's so weird not wearing a mask," but it should be weird wearing a mask. Not that
I know, well, it's been so long that we just, we're in a different headspace right now,
Yeah.
but we're getting there,
Okay.
close. So,
All right, so let me know what your husband's schedule is. I
Okay.
told my wife we're going out.
okay, let me get off the live here.
Oh, sorry.
No, that's okay. That's all right. We're just.
Sorry about that.
Don't do that. He's trying to get on screen. Sorry, Mike.
Sorry about that. At least no one said anything bad.
So yeah, that's right. No cursing. So this is the real deal, right, Mike? Say Mike. Hi, say hi, Mike. Yeah. All right. Signing off. Take care.